Hello, my name is Rohan Reddy. I'm a Director of Research at GlobalX ETFs. GlobalX is a $40 billion asset manager based out of New York City. We offer around 100 ETFs at our firm, and we become very well known for our thematic and income suite of ETF products. But in today's market environment, investors are starting to be more discerning about the way that they think about their investments. So we want to highlight for you today a couple of interesting alternatives on the income side for investors. First, we want to talk about our covered call strategies and different ways that covered calls can be used in an income portfolio. And second, we want to talk about the preferred stock market, which we think could be a very attractive way for investors to get yield in this environment. Starting with the market, we've seen that the market has been down this year, and it has been facing significant challenges given that we've seen market moves across the board that have been hurt by earnings numbers, and then also we've been seeing that growth stocks in particular have faced some challenges in 2022. But what has also happened is that interest rates have started to rise, and so we started to see interest rates move on the 10-year Treasury yield up to about 4%. And so investors today, they want to look for different ways that they can get income in their portfolios. Covered call strategies are one way that investors can do that. And what a covered call strategy does is it writes a call option on a particular asset, either an index or an individual security, and then it uses that call option premium that is received to essentially monetize volatility in the markets. So today, when market volatility is somewhat elevated, we see that covered call strategies are an interesting alternative for investors to consider. And so we've seen one of the most popular areas for investors to consider for covered call strategies are major indexes in the United States, like the NASDAQ 100, S&P 500, and Russell 2000, amongst others. So covered call strategies often today, depending on where you write the moneyness of the options, can be yielding around 12-13% annually. We prefer for investors to write their call options at the money, just because it gives investors enhanced yield. And so that kind of rises the yield more than you would see in other pockets of the market. So that's one area for investors to start to consider in the market today. The second avenue for investors to consider is preferred stock. So preferred stock today is one area of the market that it makes up about 1% of the overall bond market, but it yields around 6%. And so for investors today that are looking for different ways that they can diversify their portfolios and also get income today, we see that that could be one area of the market to consider. Most preferred stock allocations are within the US and European financial space that make up typically regulated banks and insurance companies. So that is one area that we see as a little bit more of a safe haven within the market that's higher yielding relative to others, such as high yield bonds. So the way that preferred stock tends to be affected is when interest rates move up or down. And we're starting to see that in today's environment, when interest rates have been rising, that this could be a moment where, with the Federal Reserve starting to potentially pause its interest rate hiking regime in Q1 of 2023, or at some point down the line in 2023, that preferred stocks could benefit from this trend of interest rates either not rising further or potentially declining. Well, that makes up two of the areas that GlobalX finds very attractive today. Thank you.